we are going to look at the information or the data that came last week, and also the present position, and also look at some strategies for Nifty and Bank Nifty. Last week we got the US CPI data as well as Indian inflation data, and both of them were on the upside. In fact, the US CPI data was slightly more than even expected. Indian inflation data also came at around 7%. So this is still high on the higher side. Indian Indian CPI was around 7%. RBI is supposed to maintain it in the band of 2 to 6%, and the median is 4%. So anything more than 6%, anything more than 4% itself is unacceptable. Anything more than 6%, definitely the inflation has to be brought down to this particular band. So that is the mandate of RBI. Now we have seen increase in interest rates from 4%, 4.1%. Now the report has come to 5.4. And in the next meeting, suppose they may increase it by around 40 to 50 basis points. This is the expectation. So we may see the repo hitting closer to 6% in 5.8 to 5.9 in this meeting, and then probably in the second meeting I think we should expect the Indian interest rates to come closer to 6.25% by December end. 6.25% by December end. And US Fed meeting is taking place on Wednesday, so we'll get to know about the outcome on Thursday. So to that extent, market can be quite volatile, because the higher inflation now means that Fed is going to increase interest rates by 75 basis point, and there is also an outside chance that 100 basis point can be increased. Now 75 basis point is factored by markets, so if only 75 basis point is increased, then probably the market it's always a sell on rumor, buy on fact. It could be that way also this time. So there can be some relief rally that's possible after the Fed meeting. That's one. But in case if Fed increases the interest rate by 100 basis point and continues to sound hawkish, then I think probably the path of least resistance is for the market to go down. And till now, one interesting fact that has emerged in this last 3 months is that Indian markets have decoupled from the US markets. So the Indian market is being very differently, with a lot of funds coming in. Even the FIS flow has reverted back. It was a sell till July. August, September data shows that FIS also come back to the market, and in fact they have bought banking stocks quite ferociously. So whether we will continue to get decoupled from the US markets and the world will see us different, because the growth rate is still there, going to be 7.2% or 7 to 7.2% this year. Inflation is a global phenomenon. Probably we are slightly better compared to other economies probably, and so there is good growth projection is expected to climb higher in coming years. With that, I think the view from outside is that India is an oasis of a better this one, both financially as well as economically, and so we are now being viewed very differently from other emerging markets. That is, we are not getting tagged along with other emerging markets. So there is a feeling that we are going to be looked as a standalone market, because the last 3 months, if you see, the US markets is falling, but Indian markets is still up. So now if you look at where we are right now, we are at 17,600 to 700, that range, which means we are only 5% from the top of 18,600. That means 1,000 points, approximately 5 to 6%. But look at US market. It was 4,000. It was the top was 4,818, and right now we are at the 3,800 range. So approximately a 20% fall. Approximately 20% fall, whereas we are at a 5% fall from the top. This shows that we are outperforming, and we have not got tagged with US market. So normally it doesn't happen. Most of the time we have a perfect correlation with the US market, given a couple of days here and there. But this time it is quite surprising. So the statistics is not something with which we can go about right now. So we should be quite careful, because there's a chance at some stage, possibility that we can also tag along with what the global markets, and probably our fall can be steeper in order to catch the global market. That's also possible. So it's time for us to exercise caution as we try to understand that the Indian market seem to be now looked at differently from the US market or other developed markets or even emerging markets. At the same time, because of the past correlation with these markets, it also makes us feel that whether we will also know at some stage get clubbed with the other markets at some stage, and we also will have a fall. So that is a worry there still. So we need to balance these thought process before we look at our strategy. And the strategy as such could be different for different set of investors, because somebody will be doing day trading, somebody will be looking at 1 week horizon, somebody could be looking at sort of an investment for a period of 3 years and 5 years. So how you shape your strategy depends on what you look what is it that you want from the market, and how much of resources and time and skill that you have to meet this market. So right now, let us look at the what is likely to happen, what developments can happen now, and what is the technical position of the market. Now, as I told you, we have got the Fed meeting, upcoming Fed meeting now on Wednesday. So this is a very important event. Then we have got a Bank of England meeting also coming on Thursday. So these are two important events. Then after some time, we will have an RBI meeting later part of this month. Or October first week, I think we will have the RBI meeting coming through. So these two meetings, particularly the Fed meeting, will pose very important this one, because one is the announcement on the interest rate, whether it's 75 or 100 basis point, and what is the guidance on interest rates they are going to give for future. Suppose if they say that they are going to be aggressively hiking rates in upcoming meetings also, then in that case global markets definitely will be jolted. And we could have some temporary fall. We could have a temporary fall, and then probably we have to see whether we are again getting decoupled from the rest of the markets and then start moving our on our own. Now, on year-to-year basis, if you see, we are quite we are flat. See, last year, let's look at the big picture. So go to the month pattern and look at the last September. Last September, we were 17,608, and we are the same place right now. So we have not fallen in any significant manner on year-on-year basis. But whereas global markets have fallen significantly, so to that extent, we seem to be getting into slightly lower correction compared to other markets. So we have to look at this quite in an optimistic fashion, but exercise caution. Now we will look at the technical position of the market from the daily basis to weekly basis to monthly basis. On the daily basis, right now today it took some support. The candles looks to have taken support, and probably since it has closed, the close is above the previous day low. So the previous day low was 17,497. So this is a good pattern as far as intraday trading is concerned. So any dip towards 17,497 or 500 is a good buy, because you got here also 17,485, 497. So anything close to 17,500, I think with a stop loss below 17,429. So tomorrow, if you see any dip, so the first strategy for intraday could be is buy closer to 17,500. Of course, the market is closed a little higher, but in case if there is a fall early morning tomorrow because of global developments, this is a buy place, 17,500. Stop loss 17,420 or so. Now, where is it stagnating right now? Today we saw the resistance at the 20-day moving average. So this is a 10-day moving average. I'll change it for you for 20 days right now. So today this is 20 days, is it? Okay. Now see, today we had a resistance 20-day moving average. It was 17,675, 17,676, and we had a resistance 17,676. So if it starts to move above that, if it starts to move above this, then in that case, though, we can look towards going long keeping this low as a stop loss. This low itself as a stop loss. So either we have a dip towards 17,500 where you buy with a 17,425 as a stop loss, or if it starts moving above 17,667, 665, that case also we can go long. But to what extent it will carry us? Now we look at the this day moving average, 10-day moving average. Now it's coming. Now the 10-day moving average is now coming at 17,795, and here is a no, there's two important highs. So we made 17,775. So 17,775, 17,780 could be the resistance now. So the resistance now 17,780. So if it breaks today's high, which is 17,660 or 670 levels, then in that case we can go long with a profit target of 17,780. 17,780. The stop loss is only below 17,480 for the time being. We have to keep it like that. But in case if tomorrow, first if it doesn't rally, if it dips, then we buy closer to 17,480 and put 17,420 as a stop loss. Buy at 17,480 with a 17,420 as a stop loss. So that is also workable strategy. Now let's look at now the what are the likely situation. Now see, this is one important pivot low. This is 17,770. Okay, 17,770. So that has, since that has been broken, we can just keep the 70 Fibonacci retracement. It can climb up to 78.6% retracement, right? So tomorrow, if you look, if you see this, good chance that probably we can get 17,770 or 17,755, which is the 50% retracement. Then 61.8 comes to 17,830, then 17,939. So good chance that at some stage of that we can still get 17,850 to 950. So this is possible before the market can even correct a little lower. Even if it's going to fall, probably there's a chance that it can climb to one of these two levels, right up to even up to this levels. It cannot be ruled out. So the first chance that we can get for a small uptick is that buy above today's high, which is 17,665, towards a move towards first 780, 850 and 950. And the stop loss I would prefer is around the 17,470, 480. That's the first, that's the stop loss you can take. But in case if there's first a dip, buy at 17,480 with a stop loss of 17,425. So this is the general strategy that you can adopt for as a trader. Now let's look at the big picture, then we go look at some option strategy, or if there is any possibility of an option strategy here. Now let's look at the weekly picture. The weekly picture still is on the buy side. It's a clear still on the buy side, because you're getting higher tops, higher bottoms, higher tops, higher bottoms. So this bottom has to be broken for time being. And next week, if this high is broken, if this week's high is broken, then this low itself can become a stop loss. So we have to wait and see for some more time. So right now the weekly situation is still good as far as Nifty is concerned. Though the daily chart shows that probably there can be some resistance towards the 850 levels to 950 levels if the rally continues. But first resistance can come closer to 17,750 itself. Okay. Now let's look at the monthly chart. So monthly chart for big investors, right now the 10-month moving average is coming closer to the 17,104, 105. So that's going to be a very important support level. So that is where the first dip came. So probably we can expect the market to take support closer to the 17,104 or 105 levels. Now the same thing of a 20-day moving average here, 20-month moving average. So there was one dip which is below this. So if we put it on the low basis, close. Okay, so there was a good support on a low basis as far as because so many times we have seen the 20 month low being a support. See here in many times 1, 2, 3, 4. So for many months after that it has gone up. So this 20-month low is coming at this place, which is the right now it's moving up, and in this month it is 15,900. So maybe it will go to 16,100 or 150 level. So the good support in case if there is a bigger fall because of Fed meeting outcome and global markets get rattled and Indian markets go down, then I think closer to 16,100 or so can offer a very important durable bottom where the investment definitely can be done. Definitely can be done. You will see a very good result around that level, right? So 16,100 you can keep it there. Now the same thing we look at for Bank Nifty. Now option strategy last week, just to have a review of what happened, we had suggested no, for the last week expiry 17,600, 17,800, 18,000, if you remember that. The market last week it closed closer to 17,870. So in this case we would have made from here 270 rupees, here 70 rupees loss into 140. So 130 rupees we would have made minus approximately 30 rupees which you have paid a premium, 100 rupees. So 100 rupees profit we would have made. So this is a strategy where probably even better than, suppose if you have bought even a call option for that time the market was close 16,000, 17,625 or so, you would have paid something like 180 to 200 rupees here. So we would not have made money, but whereas we have made something here. Okay, so we cannot be overtly bullish in a situation like this, right? So even if the markets have to go up, now let's look at what is the present option premium for 22nd. So for 22nd, for the 17,600 right now, 17,600. So the average is around 140 rupees. No, 17,600. The call and put, if you average, it comes to 140. So 140 into 2, if you make it, it's around 280. So 17,880. So the market shows as if we will not be closing beyond 17,880 and 900, and that probability is low. It's not that we will not close. The probability that it will exceed that could be hardly 15% or 20%. So in order to increase our probability and pay less of this, in case if there is a significant rally after this, so what we can do is that we can take a 17,000, maybe 17,700, 17,900, 18,100. So if you do the butterfly, 17,700 is 108. 17,700 is 108. Okay. 17,900 is 41. Okay. So either we take a plain call spread option and pay 67 rupees here. And pay 67 here, and or otherwise you take a butterfly spread. Okay, butterfly you do into 2, so this will get 82. So you'll pay 26 rupees here, and 18,100 call option is around 12 rupees. So you may pay 38 rupees for this right now. So 17.7, 17.9, 18.1. Okay, it's around 38 rupees. It's 38 rupees. And either you can take 17.7, 17.9 and 18.1. There's a very negligible, I mean, like the chances that it can close about 18.100 is going to be quite low, because 3 times it has already slipped from 18.1. So definitely we can have this structure 17.7, 17.9 and 18.1 and pay 38 rupees. In case if there is a bullish move also, and probably it can settle anywhere between 17.7 and 17.9 at the end of the week on Thursday, because Thursday is a day when we'll come to know about the Fed meeting results. So before that, market can a little bit wobble. So even on that day, if it goes up, in that case we may have 17.7, 17.9 and 18.1. You can consider that. But in case, because tomorrow there's a chance that if it goes to 17.750, it can have a dip from there. So and then fall back towards the 17,650, 60 levels. That's a possibility that it goes up a little bit from here to 17,750 or 770, and then as a fall closer to 17,640, 50 levels is a possibility. So we can have this structure 17.7, 17.9 and 18.1 as the as a structure to look at the view that it can settle between 17.7 and 18.1 in the course of, I mean, on Thursday, by Thursday. So this is one thing that we can look at it, because buying a call option above 17.9, I think very difficult to, because chances it can go to 17,930, 940 also and then still fall. So it is better to buy this particular structure for the time being, okay? And then look at the development on Thursday and take a call as to what should be done with one of this, okay? So now to take a bearish view is a little difficult at this moment, despite the despite the developments internationally. So we can just wait and see how the performances over this week before we take a outright bull call thing, because if it is going to go above this level, see the 17,770 or so, I think if it starts to go above the 17,750, 770, then we need to be bullish again. No, because it will be breaking above all the important moving averages. Then it starts to go above the important resistance levels. So any decisive break above 17,730, 740 itself, no, we should be looking towards on the longer side of the market. Okay, we should be looking towards the longer side of the market. Now, since this is a lower close compared to this, so this lower close is going to be very important. That is 17,530. So many times we have seen that 17,530 is not broken on the close side. See, for example, here 17,000 it dipped to 484, but closed better. Here here is a close 539 is the close, right? So so many times we have seen the close here, see 522. So we are getting a close which is like 525, 530 levels. And today also, if you see, it went down but closed above this 525, 530. So we need to have a close which is below 530 levels right now. So if that be the case, if there is a close below 530, then we can look towards going short, keeping this high as a stop loss. So just look at what's happening with respect to the close and take a call towards building your strategy. Now today being higher close compared to the this one, so we can look towards being on the long side for the time being. So that's a strategy where we have put in either a butterfly spread, or probably you can even look at it like this. That is, though you can go for a call spread option. The call spread option between what we are given 17.7 and 17.9, which is around 67 rupees, and you can put in a stop loss. You can put in a stop loss below 530 on a close basis, So another strategy is that you can consider 17.7, 17.9 for 67 rupees. Okay, for 67 rupees, and if it is going to have a close below 17,500, 520, 530, then you can remove your call spread option and take a small loss and leave it there, right? So this is another strategy that you can look at it. So there are two strategies we have looked at it, a bull call spread and also a butterfly spread. So let us see what happens on Thursday. Let's look at the bank nifty. So bank nifty, we look at the 10-day average itself. Okay. So we have not had any still a close below this. I think now it is taking support at that 10-day close itself right now, and the support that it has got today, and still with bank nifty having a higher low in the entire daily chart, we should be looking towards going long, because there is a double top here. On these 2 days we have got the same top almost. So if it starts to go about 41,184, so bank nifty again bullish above 41,184, and the stop loss will come below this low, which is 40,500. Now based on this we can look at any strategy for the, this one. So 41,184, so we can look at 41,200, okay, then 41,500 call spread. See, if it is going to go up, let us look at the possibility of where it can head towards. Now if it is to go up above this, then probably the high that we could see is 41,840. So we should be looking towards 41,840, right? So we can put in a strategy where we can go long between 41,200 and 41,500, or even a 41,500 and 42,000. So let us look at the option prices for 41,200, 41,500. Bank Nifty. See, the option price indicates that now we are closer to 40,900, right? So approximately is 400. So it is expecting 41,800. So the close is expected to be less than 41,800. That's the probability. I'm just talking about the probability of a close above that is going to be a little difficult. Okay, not that it will not happen, but generally speaking, no, we are expecting that resistance. So if you do a 41,200 is 302, and 41,500 is 185. So if you do a bull call spread between 41,200 and 41,500, so this is around 300, this is around 180, I think. 185. So you'll pay 115 rupees for this. Okay. Now let's look at, still 42,000 may not be that easily crossed, but there's a chance it can go up to 42,000. So instead of doing a butterfly between these levels, I would prefer 41,500, 42,000 butterfly spread and 42,500, because this is not possible. If it goes up, then definitely it can go above 41,500. So let's look at this: 41,500, 42,000, 186 and 70. So approximately. So this is 185. This is 70 into 2, 140. So you will pay 45 rupees for this, and 42,500 is 27. So you'll pay 72 rupees only. You'll pay 72 rupees for a move which is between 41,500, 4200 and 42,500. Good chance that it may not cross 42,000 that easily. It may not cross 42,000 that easily. So I think you will definitely have a very good chance of making good amount of money around this level. Okay, so 41,500, 42,000 twice and 42,500 paying for 72 rupees. Otherwise you can look at in order to make more money, you can just look at only this call spread 41,500, 42,000 and pay 115 rupees. 115 rupees, and if it starts to slim below this low, if it starts to go below 40,500, then you cut it off and take small loss and leave it. Take small loss and leave it, because then the chances that it can slightly go much lower, which is could be to the 20-day moving average, which is around this level, 39,800 levels. So better to avoid taking steeper losses. So in case if it starts to cut below this low, then whatever bull call spread that we have taken, we can remove that. Similarly, same case in case of a butterfly also. In case if it starts to move below this, you put a butterfly. If it starts to move below this, then in that case we can leave the trade. We can leave the trade, maybe with a small loss. So 41,500, 42,000, 40,500. You have paid some 70 rupees, and if it starts to go down below this, maybe 10-20 rupees loss. I think we remove that and leave it. Okay. So that's that will be a very highly profitable trade, because if it starts to climb, suppose if we put a 41,200, 41,600, 42,000 itself, we may not have much of a profit. Okay, we will not have much of a profit. So better to put it slightly, take a strike which is almost from here the option price premium. So that is around 400-500 rupees. So I rounded about to 41,500. Similarly, case of Nifty, if it is 150-160 rupees, better we take the 17,700 or 17,800 as the first point to do the trade. So or at least 17,700 there. So in the case of Bank Nifty, we take the 41,500 for a round figure. Okay, 41,500, 40, because the chances that it could go up to around 800 points, and the 3 times of the option premium price, normally it doesn't exceed that. Okay, so 42,200 itself may not exceed. So we can put the 41,500, 42,000, 42,500 as a good level to go for a butterfly spread. Okay, so these are this is the view that we have, and this is a strategy that we can put for Nifty and Bank Nifty. For those who are finding it much easier to go only with plain option or with the futures, then in that case you can replace the futures with slightly deep in the money option in order to reduce your cash outflow towards margin. So in case if you get a move above 41,200, then you're going to go in the long side, then better you take the 40,500 deep in the money call option for this month, for this week. Then in that case you will only pay the premium and you will not pay the margin amount. You will not pay. So that way you you can save your this one margin requirement. At the same time, better risk management compared to futures. So those who don't want to look at smaller profits but want to go the whole hog, then if certain important levels are crossed, then in that case whatever that you want to do it in the futures, you can do it with respect to the deep in the money option. So these are the two important this one. And if you look at it, the main profits are coming from banking sector. So banking, so that is what the Nifty Bank is Nifty is showing. So ICICI, HDFC Bank, All other banks also, I think I'm not mentioning this, whichever bank that you want put, most of the banks are doing well. SBI. Okay. So this any of this in on the stock side, if you want to trade, but remember these are all come to some high valuation in terms of book value. So fundamentally, this is not a place where you can definitely look for investment. Only for trading in the shorter period of time. Okay, that case you can buy maybe SBI is slightly no better, because I think ICICI and all is run quite heavily. Though SBI also is run, I think there's probably can be a little more steam, higher steam left in as far as SBI is concerned when compared to ICICI. So banking generally, banking sector is continuing to do well. Then of course we have got the auto sector, which is also doing well. The only main sector which is not doing well is the IT sector, because IT sector is clearly following the Nasdaq. So I think better to avoid, because there's a very high correlation right now between IT sector and Nasdaq. It's not performing that well. So I think we can leave this. Okay, IT Nasdaq sector we can leave it. And of late we have seen cement stocks have gone up. Okay, then real estate stocks also done well. So most of these stocks, including FMCG stocks, have done well. Commodity stock better avoid. So which are the two important things that is better to avoid, or the right now IT and commodities time being? And the two which you can be in is banking, because banking we have got a good credit growth rate, but valuations are becoming stiff. Normally the PSU banks have started to do well. Probably for accumulation, PSU bank stocks can also take place. So banking sector, auto, and property, then cement. So these stocks are started to do well, and you can avoid this space for time being. Okay. Now let's look at some important stocks, particularly let us look at Reliance. Has not done well. See, in the last 3 months, if you see, Nifty has climbed from 15,200 to the present level of 17,600. But if you look at Reliance, because probably the crude prices are not doing well, it has started to fall. We have this one, that is Reliance, not doing that well. But nevertheless, no, we can if it comes closer to 2350, because it has not gone much below 2350, where it is finding a lot of huge valuation supports. So probably we can look at 2350 levels if it comes for investment purposes. Now let's look at Tata Steel. Just for Vedanta did very well because of the semiconductor plant announcement. So I've been maintaining that Tata Steel will not do that well because of the inflation factor. So now it is about to fall below the last month low of 103. So better to avoid. So fundamentally, the commodity prices have to go much lower, because of the fight against inflation. So now we have seen major resistance coming closer to that. So if you want to put in any bearish strategy, you can put in a bearish strategy for Tata Steel. You can keep now it's 103, so you can put 110, 120. You can do 110, 120 call option sell spread. Call option spread sell you can do. Okay. Even you can do 105, 115. If you get 4 rupees or 5 rupees, you can do this, because the chances that it go above 115 seems to be a little remote. So for the coming month, you can do 105 to 115 levels also, as far as Tata Steel is concerned. Now let's look at other stocks which are doing well. We have Coal India, which is doing very well. So this is Coal India, and now we have got the uh, stocks above the important 10, 20 and 50 moving averages on the monthly chart. So we'll have to get some support in case if it comes a little lower, we are likely to get some support. So this is a stock which can be looked for buying because they pay good dividend also. Now let's look at the ICICI. Where does it stand? Because it's almost like buying the Nifty Bank. So we have strong strong support at the lower end, but it did not come to that extent down. So that will come only in any deep sell-off. So right now, if there is any deep sell-off, it can be bought near the 10-month, 20-month moving average. So we look at even the 10-month now. Where does it fit in for investment? 10-month average. It's taking time to get it. So the 10-month average is coming closer to 781. So this is the place, okay, 781. So in case if there is a slightly steeper drop, I think 770, 780 is a place where we can look towards going long on ICICI stock, okay, 780, 781 levels. But that's quite far off right now. But we can see it is this pattern, this one is not good. So at 936, I think the distribution has taken place as far as ICICI is concerned. So we should definitely wait because valuation wise it has come quite stiff. It's almost come closer to four times the book value. Because of that, let's wait for some correction, which could be at least 12%, 15% from the top before we look towards entering the position. So which means around 100 rupees or so, which could put it around the 835, 850, below 850 mark. So we'll wait for some more fall as far as ICICI is concerned. So these are the stocks which are which we discussed, particularly the stocks which we need to avoid. Tata Steel is quite bearish, so you can put in a sell call spread. Reliance, wait for a buy towards 2350 go for an investment buy. ICICI, it's quite topish as far as book value is concerned, so wait for a dip for a buy. Okay. And on the whole, in order to replace this fear on some of the stocks which are at a higher valuation, but still there could be some momentum left because of certain stocks like SBI. Banking Nifty can be bought if it is going to cross the 41,200. It can head towards the 41,840 to 42,000 levels. Nifty, it has to clear some important resistance level, which is 17,750, then 850, 860, then 950, 960 levels. At one of these levels, it can face a resistance and then drop down to some extent. But tomorrow, if it starts to move above, cut above today's high, you can definitely go long. Or if there is a dip also, you can go for a long as far as Nifty is concerned. And in Nifty, we have highlighted that you can either go for a bull call spread between 17.7 and 17.9 and take the profit closer to 17.9. Or you can go for a butterfly 17.7, 17.9, 18.1. Okay, because for the remaining days, for the option premium that we right now see, we don't expect the prices to be much above 17,950. Okay, so with this, now we are concluding today's session. So any queries you may ask now. So thanks for your participation. See you again on Thursday.